first idea is Headwater Exploration, HWX on the TSX. Can you remind us what they're all about, Dennis?
Yeah, if I had to pick a theme between my three picks, it's no leverage, nice yield, and ability to grow cash. And even grow. In this case, Headwater is a mid-cap. I think it's about a $750 million market cap oil producer. In the heavy oil side, they're in the hottest play probably in Canada, the Clearwater Formation, which is a heavy oil formation. What can I say about them? So 6% yield. They are growing 40% their production this year and anticipated to grow 25% next year. And they have $100 million of cash, and that will probably grow in the next couple of years to where cash could be 20 to 25% of their market cap. So I can't think of anything better than a clean balance sheet, the ability to tuck in more land acquisitions to build your inventory. In this case, I think they have more than 10 years of drilling inventory in one of the hottest plays in Canada. Very strong free cash flow, and they understand the need to have shareholder returns, so a nice 6% yield that I think can grow quite easily in that 8 or 9% range, even if the stock price didn't go up.
Okay, we've got B2 Gold, Clive Johnson's company, of course, the core of its operations in West Africa, but they made a move into Canada's north with the acquisition of Sabina.
Yeah, this is a million-ounce producer. As you said, production in West Africa, and I have been accumulating it over the last several months. I've owned Sabina also, so I tendered that in. I was quite happy to see that deal. So they enter into Nunavut, so a new territory for them. But these guys have built in Russia. The Kupol mine is nothing new, so they have the experience, and I think they can even improve the economics of that Back River mine that is being built. It's an unusual acquisition. Usually they don't buy in the middle of something getting built. They tend to buy before so they can look at their own financing arrangements, or they buy it when it's done and all the kinks are out of it and they can have an operation that is nice and smooth and be a positive for the overall company. So this one, I do like the name. It's I think it's a 4.5 or 4% yield. No debt again, very important. And Sabina's Back River mine really does offset decline from another mine that shuts down in 2025. So it allows them to kind of stay flat at 1 million ounces.
And then your final idea is Trican Well Service, TCW, leverage play on oil prices?
Yeah, I mean, this one probably really low on the radar screen for a lot of people, but very well covered by the Canadian banks. And this is a company, again, no debt. They have a nice yield. I think it's 6 or 7%. And the fact is they trade at a 2.5 times EBITDA multiple. Historically, let's call it the last 10 years, it's been a 5 times multiple. I understand they've gone through the trough, you know, where services were down, but now we're seeing that pick up. They particularly are advantaged on the gas side. They are probably the purest frac play that you could see publicly listed in Canada, and they'll benefit from things like Northeast BC, where First Nations issues have been resolved in that Blueberry area. Obviously, LNG Canada coming on. That probably means a 10% pickup for their rig activity as that comes on in 25 and 26. So dividend, ultra clean balance sheet, so they can weather any near-term storms like weak gas prices that we experience right now.
That's interesting. So they've really tamed their debt load?
They really have. I mean, you could say that about the energy sector in general in Canada. They've all focused on cleaning up the balance sheet and then pivoting into return of capital. Again, it's an overused term, but I think it's very crucial to maintain that balance between how do I run my business, moderate growth, but return capital to shareholders so they can see the true value of the business they've created.
Is this a theme across the resource sector? People just keeping their production growth modest so that they can get cash back to investors?
Well, I'd say in the energy patch, that's certainly been the case the last few years. I'd say they heard shareholders, you know, after a 5 or 6 year span where it was growth at any cost, especially I'd say in the US, not so much in Canada. You've seen this mantra become the norm, and you've seen the stock reactions. I think they've been rewarded for it. So how do executives get compensated? In the past, it was absolute growth. Now it really is about meeting other criteria like return of capital to shareholders, generating free cash flow. And as long as you can orient their compensation and get rewarded for that activity, which we've seen in the last 3 or 4 years, that's how the companies will behave. And the stock prices have reflected that.
I suppose there is a built-in conflict with takeovers. A CEO is going to expect more money if he or she is running a bigger company. But me, as an individual equity holder, I may not do that well with a takeover if they push one through.
Well, especially if you have change in control parameters where company CEOs might get paid 2 times their overall compensation for the last 3 or 4 years, if there is that change. Yeah. And yes, they can benefit from running a larger company if they are the survivor CEO in that situation.
Yeah, it's interesting because I think evidence shows that takeovers often don't enrich shareholders.
It really depends what you're referring to. You know, I've been talking about the Teck Glencore deal, and for me, I don't see the same upside outside of, yes, exiting my metallurgical coal right now because they will give me that cash option.
Yes.
But at the end of the day, I want to get the full re-rate, not 24% of it.
No, that's right. And there's apparently, so many people sniffing around Teck's copper mines at this stage.
They are in the driver's seat in terms of attractiveness, and it's just who's going to pay the right price if you could get the Keevil family really on board, and the Sumitomo group also, which will vote, I think, in line with whatever the Keevils want.